Federal Reserve Bank, often called the Fed, is the central bank of the United States. It was established in 1913 by Congress after a series of financial panics revealed the need for a more stable and secure financial system. The core purpose of the Federal Reserve are to maintain stable prices by controlling inflation and maximum employment, and to promote a financial stable system. To achieve these goals, the Fed manages the nation's money supply and sets key interest rates, most importantly the federal funds rate. This rate influences the cost of borrowing and lending throughout the economy. Additionally, the Fed supervises and regulates banks and acts as a lender of last resort during a financial crisis. For everyday Americans, the Federal Reserve's actions have a direct impact on multiple aspects of daily life. When the Fed changes interest rates, it affects the rates on mortgages, auto loans, credit cards, and other forms of borrowing. For example, when the Fed raises rates, new loans or adjustable rate debts generally become more expensive. Conversely, savings accounts and certificates of deposit tend to offer higher returns. The Fed's management of inflation and economic growth also influences job creation, wage growth. In short, its decisions affect everything from your monthly loan payments to your ability to find and keep a job. Globally, the policies of the Federal Reserve have a significant ripple effect. When the Fed raises or lowers rates, it often influences the strength of the US dollar compared to other currencies because higher rates attract foreign investments. This can make imported goods cheaper for Americans while making US exports more expensive for buyers overseas. Countries and companies that borrow in US dollars may find it more costly to repay their debts when the Fed raises interest rates. Additionally, Fed policy decisions can shift global trade and investments, affecting commodity prices and financial markets around the world. In summary, the Federal Reserve was created to keep the U.S. economy stable, but its influence extends far beyond American borders. Its decisions shape borrowing costs, savings returns, employment opportunities, and even the global flow of money and goods. What the Fed does in Washington, D.C. truly reaches into every American's wallet and impacts economies worldwide.